Morning, Steve Free in Chicago with the morning grain comments. Well, the markets broke pretty hard yesterday on a favorable 2-week forecast and also some talk that the crops are not going to be hurt as much in the month of August as some had thought. So we saw some liquidation. The interesting thing about it is, though, open interest in corn and wheat actually went up. In beans, they went up a little bit too. So you would have thought that if longs liquidated, the open interest would have went down. So still don't think we're at a price low enough to encourage consumer demand, but it's strange that the open interest went up. Overnight, prices are a little bit higher. We had a couple things happen. The 2-week forecast, the American model, went drier. And so now we have to figure out what's really going to happen, especially next week across the Midwest. Second thing, we saw a private crop estimate that put the U.S. corn yield below 163. Now, if we work that out in million metric tons, it's almost 40 million metric tons down from a year ago. And that completely offsets the increase that South America has seen. So it could suggest that corn prices don't need to go as low as what was feared yesterday with this lower crop estimate. We still doubt the USDA will say that on August 10th, but it could be a good number for the final. We also see that we're going to have 2 private crop estimates that come out later this week. I would guess both of them will be higher than last night's estimate. There was some stopping commercials in the soybean oil, and yesterday's crush was higher than expected by the trade and equal to last year. So we'll see if we can find some support in the market at these price levels after yesterday's sharp losses. It's still basically a weather market, and we'll see what the funds want to do going into the August 10th crop report. As always, my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.